What's up, guys? Welcome to another video. This is the Tradeversity series videos on how to execute trades in the market and how to extract money from the market and setups that I look for every day to be able to make money trading NASDAQ, ES, or whatever index contracts that I look forward to trade that day. So, to begin, I took 3 trades today. My first 2 trades were losses, and my second trade netted me about $20,000 in profits, negating those losses by a factor of almost 10 times. Now, to start, my first trade was a loser. This was a trade that I took that was actually up about $3,000, but I just didn't take profits because kind of just wanted to see where the trade would take me. We can review that trade very quickly. This second trade was basically a scratch trade, so I'm not going to review it. I was only in it for 1 minute, but this first trade, we can go over it. What I seen, my first entry was at 938 at the 21,329. I just call it 330. So what I seen at the open here was a strong move to the upside. The 930 open was kind of a muted open. I was on a 1 minute chart looking for my entry. This was a pretty simple setup. I'm not going to spend too much time here. It's a pretty simple setup. I just seen lower lows forming and higher lows forming here. Like you see on this chart, this is a bearish type of play that I wanted to take for a quick scalp. As you can see, my first entry here was at the 330s here, which is essentially the top of this candle. I was only risking basically where my stop was at 56, so about 15. So about 20, 25 points I was risking. And I was in profit all the way down here at the 90s, but I didn't take it because I had a feeling we were going to test the close to the settlement price of yesterday's session, which was around the 250 area. So that's one reason why I didn't take profits on that trade, and I lost 2,700 on that trade. But going to my winning trade and how I was able to net 20,000 on this trade, which put me up 16,000 on the day. What I was looking for originally was a move back into settlement price from yesterday. Now, when I say settlement, some of you guys might ask what I mean by settlement, and I'm going to explain it here. So if we go to the minute chart, we see that this is on a regular trading hours chart. We see that yesterday, January 6th, um, well, this level is actually from January 2nd. This open price here, which was this downward momentum here, made me realize that this is a potential zone where the market could retrace from, where the market could retrace to, and give an opportunity to take a trade off of. So this settlement zone here, which I marked, was 21,190, let's call it. And this settlement price was the price that the buyers and sellers agreed on January 2nd, 2025. 21,190. Everybody was happy. Buyers, sellers agreed on the price to close the market that day. And we gapped up that New York Stock Exchange opened at January 3rd to basically almost a 100-point move to the upside. So this gap fill area is important. As we go to my trade here, we see that I spotted this area of settlement here. And coming into this session today, this was a area that I was looking to play long off of, knowing that many people will be selling into this area and many sellers will get stopped out, which will fuel the rally for buyers to take the market higher, close to either overnight session high or pre-market highs. So if I go back to electronic trading hours, I will tell you guys how I formulated this idea to go long in the market. As we go to my preferences to show my chart executions, you can see my first entry was at 21,223. Now let's talk about my stop loss. My stop loss on this trade was 21,150. So I was giving myself about 70 points, with which is about a $7,000 risk on five mini contracts on the Nasdaq. Now some of you might say, "Oh my gosh, you're risking 7,000 on just one play." But this is not the correct mindset to have. You have to look at the market in terms of risk to reward ratio, your R multiple. I was risking 70 points, but how much was I intended on making? My first target was here, 21,400 essentially. 415 was my ultimate target, but I held until 423, 424. Now, why? First, let's look at my risk. Why did I put my risk at 21,150? Now, to explain more of my risk is here, we'll have to zoom out and go to the 4-hour chart to see what type of market structure is forming at that level. Now, when we zoom out to the 4-hour chart, 21,150 was a level that, in my opinion, was respected and almost a pivot point in the market where market sentiment shifts at. In November, we broke this level and traded above it for a couple of days. And once we broke this level again, market sold off almost 400 points. So this level told me that, and as you can see, once we broke down from that level and we came back and tested it, we had some consolidation here. We broke out again, went to all-time highs, came back again, tested this level. I'm not exactly, but you see that this level is a respected level in the market, and buyers and sellers are both interested in this level. So that is why I set my stop to be at that level, below settlement price, good market structure at that level, levels respected. Buyers and sellers are both interested in that level. Even if we go to the hourly chart here, you see that it's not as clean as the 4 hour, but market structure is still there. We came here, tested it, same as the 4 hour. So this is where my stop was placed. As far as my take profit, I put my take profit at a reasonable target, which was pre-market high. You have to understand market conditions and where the market could go if your trade goes in the right direction. The reason why I put my take profit at pre-market high was because as we open the session here at 9:30, you can see that we had an initial consolidation candle for the first 5 minutes, then we sold off immediately, consolidated for a good hour, I would say, 45 minutes. We consolidated. We had a high here at 410 ish area, and this area was area that I was looking forward to trading if I seen a sell off back to settlement. So after I took my first initial loss at around 940, I just waited. I took another trade around 1014, but that was a scratch trade, so I don't really count it. I waited until my entry model was present to tell me to go long. Now I don't just look at candlesticks and say, oh, it comes down to settlement price, so I have to go long. You go back to regular trading hours. Oh, it comes down to settlement price, so I have to go long. No, that's not how you trade. You have to watch price action. You have to watch order flow, depth of market, depth of footprint charts. All of those are tools that you can use to validate your entry and not just go in blindly. Now, to further explain this, I would walk you guys through how I was able to spot these buyers on the tape and how I was able to capitalize on making $16,000 on this trade. As you can see, our area of interest is this area right here. My entry was indeed 21,233. I'm going to put it here so you guys can see. I want to take you guys through the order flow and how sellers were stepping in the market, pushing the market lower, and how buyers scooped up these sellers. Sales stopped, were triggered, and these sellers stopped out of the market, which gave buyers the opportunity to buy the market back up and take it to pre-market high. So as you can watch and see, as we approach this level down here at settlement at 21,190, the market was selling off pretty strong. This is 1226. Not exactly at my entry, but it's pretty close. You guys can see, I'm going to show you how sellers came in the market and how they weren't really respected. They didn't take control of the market immediately, which gave me an incentive to go long. Now, if we just look here, 1226, 30 seconds, the market is consolidating. This is about this candle here. Still coming down. Still coming down, still coming down. Let's just speed this up a little bit. Speed this up a little bit. Okay. The market is coming down here, and sellers are going to take control at around here, the 27 to 28 mark. You can see the market is pushing lower, pushing lower, pushing lower. As the market is pushing lower, these sellers are increasing selling pressure, wanting the market to go lower. In my head, I want to be patient a little bit and wait till it get the settlement. But something triggered me in that I'm going to explain here in a second once we get to my entry at 1228. I wanted to be patient here and just wait till settlement. I had two strategies: wait till settlement or place my stop close or under settlement. In this case, I placed my stop 40 points below settlement. Now here, I entered here because as soon as the market was having a influx of sellers coming in the market and increasing the pressure to the downside, the sellers didn't immediately take over the market as I intended them to below the 20s. So I got in long at 23.75 and I had a 70-point stop. I was okay with risking that much because the range on the markets was pretty substantial, and I know if I can give myself some room for a risk, that my reward would be much greater. So I was okay with risking 70 points to make potentially 200, which will be close to a 3-to-1 arb multiple. And industry standard is about 2-to-1, so anything above that is pretty good. As you can see, sellers were stepping in a little bit here. They were stepping in at 1229, 1230, pushed it all the way down to 66. And while I was in this trade, seeing my P&L go red, I want to say I'm nervous. I'm not as emotional as I used to be. I've been trading for about 5, 6 years now, so I understand market structure. You have your risk, you have your stop loss in place. There's nothing really you can do. You just have to wait till your trade plays out. You either get stopped out or you take profit. Most new traders, they come in the market, they see a little red, they just want to jump out real quick. You'll probably never ever be profitable like that. You have to have game plans. You have to have a strategy behind your plays and your trades. So as you can see, the market comes all the way down to the 60s, and selling pressure wasn't really too strong at the 60s. This gave me another confirmation to stay in the trade and just let it play out. Now this trade was indeed a 2 hours long hold, and as you can see, buyers started stepping in and buying all of this liquidity up down here that the sellers were trapped at, thinking the market was going to go lower. Settlement price did help me indeed to understand that I can stay in this trade, and this trade is still a valid entry. Now, as you can see, after that, the market just continues to rally, making higher highs, and buyers stepping in at every pullback. This gave me another confirmation that we could indeed go to pre-market pre-market highs and take out most of where the sellers is at. I didn't take profit on this initial pump up to the market just because I had my take profit set. I wasn't even looking at the screen, if you want me to be honest with you guys. I just had my take profit for 6 sell orders here on at the market. So I wasn't looking at the charts. It was either my stop loss hit or my take profit hit. So that's how I was able to make that substantial amount of money. As you can see here, my day was started off a bit rough, down negative 4,000, but after that green trade of 20,000, I was able to pull myself back up and have a green day. So I hope you guys enjoyed this video. If you have any questions, my Discord is linked in the description. You can join. It's a free Discord. I don't charge anything. If you have any questions, just comment down there. Comment on this channel, on this YouTube channel, or join my Discord and ask me questions. I also have my Twitter posted and my Instagram posted. I appreciate you guys for tuning in. Until next time.